Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 26, 2022. Hope you're all doing well. In today's segment, we'll take a look at NVIDIA. NVIDIA is a market leader in semiconductors and artificial intelligence. So with that, let's jump in and take a look at this stock and see if we can buy this company when it's beaten down big time. So with that, we'll start with a quick market update and look at NVIDIA and look at the background of this company. And then we'll look at competitive landscape and see who are the top leaders in semiconductors and which companies we can buy. And finally, we'll do NVIDIA, the fundamentals by numbers, see how are the numbers doing, is it worth buying up here. And then we look at the technical analysis and look at the charts, look at how stock is reacting in the options market and do some technical analysis. Finally, we'll conclude with the buy or sell or hold type rating here and go from there. So with that, let's jump in here. Look, from a Glassdoor perspective, NVIDIA CEO Jensen Huang gets a 98% rating. That's a great rating. Employees love the CEO here. He's also a founder. He's a very technical guy. He's also very inspirational. Folks love this company. Employees love this company. Look at the amount of ratings here. He's got 974 ratings, and he's also top CEO in 2021. And this company, NVIDIA, is also one of the best place to work in 2022. So a lot of things going on for this company. And look, employees love the company. There is no other place that you have worked like NVIDIA. So by looking through the Glassdoor, looks like employees love this company and they love their CEO. He's very inspirational and he's got multi-year roadmap, which is always good. So background checks out. CEO is the right guy for the right job and he's leading the company. All right. Now let's look at NVIDIA and look at what it's doing here. NVIDIA, as you can see here, provides graphics, compute, network solutions, and they're also big into gaming, artificial intelligence, and also self-driving. So it's one of the great companies and it's out innovating its competitors. And from a stock chart perspective, look, we got stock chart here. Last couple of earnings, as you can squint here, we got earnings, company beat the earnings, got one more earnings, again beat here, and we got one more earning just happened, they beat the earnings again. But they gave a softer guidance with the Russia-China situations, which is understandable. And from a market perspective, analyst perspective, company's got a strong buy rating, which is very good here. Even after the earnings and softer guidance, it's got a strong buy ratings. We got 22 analysts with the buy. So that's a great rating here. Look, NVIDIA stock skids as muted gaming sector offsets the earning beat. So that's what's going on here. They gave great numbers. They beat the estimates, the revenue side as well as earnings side or EPS side. But because they gave a softer guidance, stock came down about say 7-8% after the market. So at this time, I think we got to see if it's good to buy this company. So with that, look, stock is down, as you can see here, 45% year to date. That's a huge drop here, and stock is trying to make some progress as of yesterday. But after this drop, it's slightly down for the week. It's a good one to buy at these levels. We'll jump into a little more details. All right, look, from a price target perspective, NVIDIA has got lower target about 190 and higher target. Look at that high target, $410, and currently stock price is hovering around 169, and it can come down further after the drop yesterday night. And from a technical perspective, it's a sell because stock has been not doing well at the technical level. But look, from an analyst perspective, it's a buy. So I would slowly start buying this great company. It's got a lot of things going on, cutthroat competition, and also they're out innovating the competitors. I think it's a great one. All right, now let's jump in here and look at a quick snapshot. So we got NVIDIA here, about $414 billion company. This used to be a $700 billion company, and stock has come down off late with all the growth rotation out of growth stocks into other names. Look, RSI 42 tells you stock is clobbered here, and they don't have too much debt. Look, debt to equity ratio is very low here. They got a lot of money to take care of current obligations, and analysts are saying recommending buy. Look at the revenue per employee, $1.1 billion. That's a great revenue per employee. This company is doing very well. And look, from a stock performance perspective, last few months, or at least up to 1 year, it's not great for this company. Stock has been dropping off, as you can see here. But at these levels, I think you should look at the company and see if it's worth buying up here. Look, long-term performance, 2-year, 5-year, 10-year. Company doing great here. I think they got a legendary CEO, and the founder at the top is leading the company. And from a top-line revenue growth perspective, look, they got $26 billion sales, and they're growing at a nice clip. Look at the sales growth here, 29% in average 5 years and 39% in 1 year. Quarter over quarter 52%. That's a huge top line sales growth here. And look, from a next year perspective, they got a next year revenue EPS growth on the double digits here, and next year revenue growth also double digits here. We got next year sales growth double digits. That tells you company doing very well. Analysts are predicting this company will continue to do well in the future. And look, from a net margin perspective, respectable net margin, 36%. This is not a money losing company. That's great here. And they got nice free cash flow. Look at the $8 billion free cash flow. That's a great one here. And even in the future, like free cash flow is expected to grow here. Look, next year, in year 1, free cash flow is expected to grow here from 8 billion to 10 billion, and next 5 years out, it's going to grow again. So that's a good number here. And we've got a few more numbers here. Company is very solvent. Solvency ratio is very solid here. And look, company doing very well. Insiders are selling slightly, which is not a big deal. It happens from time to time. And company pays a slight dividend here, not too much. We don't need to worry about dividend. It's still a growth stock. And from a moving average perspective, look, off late it's a little bit negative. It's below its 200-day simple moving average here. From an options perspective, there is the call buying is more than put buying. That's why PC ratio is below 1. So finally, from an industry perspective, look, it gets a 100 out of 100 growth score here. Company doing very well. Value score is middle of the road here. Still a little bit higher valuation. As you can see here, we got a price to sales ratio, which is slightly higher valuation. As you can see here, we got EPS and we got current ratio. Price to sales ratio is 15, slightly high. That's one of the reasons stock is coming down. That's one of the reasons the valuation score is slightly high here. But look, Piotrowski F score is 5. That tells you company's got solid financials. Altman Z score is 18.6. Tells you it's solid. And financial health is grade B from Morningstar. Growth is grade B. Profitability is grade B. Company doing great here. No need to worry. Overall rating is 56. The company background checks out. They're doing well. Right now, company's stock is down here. Could be great opportunity to buy some NVIDIA. Accumulate slowly. All right, now let's look at NVIDIA by numbers. Look, from a number perspective, this company is growing nicely. Look at the earnings per share growth here. Nice clip here. Sales is growing very nicely. That also checks out. Shares outstanding constant here, not going higher too much. Slight increase, but no big deal. When the revenue is growing like this, it's okay to slightly grow, but not a big deal. They're not diluting the share count. Operating margin increasing nicely, nice clip. Net margin also increasing nicely, great here. And debt to equity slightly high here. I think they should try to reduce here, but right now it's high. But but I think companies should reduce this. But otherwise, except for debt to equity, company doing great here. I think they're growing the top line and they're solid in the bottom line net margin. I think right now debt is slightly high, but not too much high. It's still a fiscally responsible company here. Look, it's just 0.5. If it's over 1, I would be a little bit worried, but right now debt to equity is very, very manageable. It's below 0.5, no big deal. All right, now let's look at earnings history in NVIDIA. Look, stock had the earnings, and look from an earnings history perspective. In the latest quarter, they beat the EPS by 7 pennies, and look from a revenue perspective, they beat the revenue numbers by 194. So no issue here. Company doing great, but since they provided a little bit softer guidance, stock came down about 10%. So that's when we jump in and see if it's worth buying and go from there. Look at this consistency. Stock has been beating, company has been beating the EPS estimates as well as revenue estimates consistently. I think they had some issue back in 2018 when there is a high inflation type environment here. That's what's going on here. Right now we are back into high inflation environment. I recommend buying slowly. Stock might come down slightly, but it's good to start doing the dollar cost averaging and buy these companies small quantities at these levels here. All right, now let's look at the competitive landscape in NVIDIA. So we got NVIDIA and 30 companies, around 29 companies in the semiconductor space here. Look, NVIDIA, the top dog, it's on the top here. The biggest market cap of all these stocks here, $494 billion market cap. Nice sales growth here. Look, top line is growing at 40% clip here. Great. Net margin is great here. Look, 36%, and great numbers from Altman Z-score, which is financial standard. Piotrowski F-score tells you books are improving. No much debt here. Very low debt to equity ratio. Great. Morningstar perspective, company checks out with nice grade here, except for profitability, which is C here. And if you compare NVIDIA to its peers, it's doing very well. Look, from a peer rating perspective, they're doing well overall. They're 56, which is above average. And from a growth perspective, company knocks the ball off the park here. 88, they're growing better than their industry peers. And valuation is slightly high because price to sales ratio is 15, slightly high valuation. That's why the valuation perspective, they're in the red compared to the industry. But look, efficiency, like the margin perspective, they're doing great. They're solid compared to their industry peers, and financials are also great compared to industry peers. They don't pay too much dividend. That's why it shows red here. Momentum perspective, momentum is low right now because stock has come down. That's why it's a low momentum. Overall score is 56, so it's not too bad. It's the middle of the range here. So I say take advantage of this great company here. Start accumulating and slowly start dollar cost averaging in small quantities. Then you got a few more companies, as you can see here. Keep a watch on the overall score here. Higher the better. And we got some great companies with nice overall score here. Look at Intel, stock is beaten down here, good score. And AMD is my top pick here. Look, 95 overall score. AMD is doing great. And look at the ratings against the industry peers. This is even doing better than NVIDIA, compared to the industry. That's a great one here. And we've got one more here, right here, Qualcomm. Qualcomm is also a great one here. You could buy Qualcomm at these levels. Nice and high overall score for Qualcomm. And then you got one more with nice score. Look at the ON Semiconductor. Nice overall score of 82 here. You could buy that one also here. All right, so with that, let's jump in here and look at the competitive landscape and see what's going on here. Look, we got NVIDIA at the top here. Let's bring it a little bit to the side here. All right, so NVIDIA is at the top here. I love NVIDIA because as you look through here, look at the amount of cash they have on the balance sheet, and look at the free cash flow. NVIDIA is the top leader here. A lot of cash on the balance sheet and nice free cash flow here. And next year growth projection is great here. That's why you could buy NVIDIA here. don't worry too much. This company will do great. Look at that 1 year, 5 year performance. They've been doing consistently well. And then you got here AMD, one of the top dog in the space here. You could buy AMD. It's been doing great here. As you can see, they're also doing very well here, and they've done 751% in last 5 years. That's a great number here. And then you got two more here. We got Lam Research and KLAC. Both are my favorite. Look at that performance in last 5 years. You could buy these companies also here and go from there. We got a few more here. Take a look at this chart. You get a good idea how are this company doing. All right, let's jump in here and look at NVIDIA and see the chart here. From a NVIDIA, from a long-term chart perspective, look at the drop here, right from somewhere October 2021. Our stock has been dropping off like big time here. That's what the inflation worries does for the stock growth stocks here. Because of the inflation worry, stock came down too much here. Now earnings is over, and Fed is going to raise the rates. I think most of the bad news is factored in here, and they also gave a softer guidance. At these levels, it's good to start buying slowly here. Right now, look, they broke down below 100 week moving exponential moving average, and right now they're trying to go higher. So I think this might hold here, or they might even touch 200 week exponential moving average, and then they might go higher. That's why it's a great stock to buy at these levels here. There's a nice support level around 141 or so. This stock may not reach 141. It might go around, say, 160 or so, and then I can see the stock going higher. All right, now let's jump in here and look at a chart which is a 1 year chart. Look from a smaller 1 year chart perspective. See what's going on here. We got multiple earnings. We got earnings right here. After the earnings, stock went high. One more earning, stock went high but then came down. We got one more earning here, stock came down. Right now we have one earning, stock actually came down after the earnings. But I think stock can go higher from these levels. There is a nice support level right here around 160 or so. I think that support can hold for most part. That's when I think we should buy this company here. And look from a momentum perspective, I think it will come down today, but it's a great one here. Momentum is 41, RSI is 41, which tells you stock is oversold here. Implied volatility, typically before the earning it goes higher. Now the earning is done. I can see IV percentile coming down here. Right now, look, it's around 85, which is very inflated, but right now it's come down after the earnings. And look from a DMI perspective, stock is trying to turn positive, but after the stock drop, this is a negative right now. From a DMI perspective, technical perspective, stock is negative because the blue line is below and red line is on top. That tells you it's negative here. And look from a volume average perspective, look at that. Stock is nicely trying to rebound here. It's flat to high. That tells you folks are buying this stock because it's completely beaten down here. And look at the check-in money flow here. It's trying to go higher. That tells you the smart money is buying this company here. That's a good one here. We should buy the stock along with the smart money. I think that's the way to go here. All these big hedge funds and big mutual funds and all these companies, they know when to buy. When the stock is down big time, they start accumulating. That's what's going on here. All right. Now let's look at the option chain here and see what's going on. Look, we got the current stock price 169, all-time high 346. Look at that, it's more than double. And look at the current stock price around 169 or so. Look, we got a nice call volume here, nice open interest. That tells you folks are buying the call option, taking advantage of depressed price. And look at the call option open interest. As we go at the higher strike price here, even 185, there is a nice volume in the open interest. That tells you folks are buying call option. There is also some volume in the put option, as you can see here, but it's nowhere close compared to call option. So because you got high call option volume, that tells you folks are bullish on this stock and they're buying. Even the strike price beyond current price, they're buying those also. That tells you in the options market, folks are bullish. All right, now let's jump in here and look at the option statistics. From an option statistic perspective, look, we got here total number of calls contracts traded 858, total number of put contracts traded 668. That tells you call is more and put volume is less. That makes the put call ratio 0.7. As long as it's below 1, that tells you in the options market, folks are bullish. They're buying this company. All right, now let's jump in here and do a quick conclusion. From a conclusion perspective, look, NVIDIA, they reported the first quarter ended May 1, and look, nice revenue here. The revenue is up 46%. That's a great year, and it's also up from the last previous quarter. So looks like the data center and gaming are doing great here. So overall, from a numbers perspective, company did great. They really blow out the numbers. And look, they're also doing great when it comes to artificial intelligence, deep learning, and also the company is really doubling down on the artificial intelligence. And NVIDIA is the industry standard when it comes to artificial intelligence chips, and data center has been their biggest platform, as you can see here, and gaming also did very well. In a nutshell, companies out innovating the competitors and doing great. They're putting money into R&D and really driving the company to become the leader. And they got a long-term horizon. They're not looking at quarter in, quarter out. But look what happened here. NVIDIA plunges as Q2 forecast misses estimations on Russia-China issues. That's what's going on here. Because they gave a softer guidance and expectations, stock came down here. And they might have about $500 million, to account for COVID-19 lockdowns in China, and they're also stopping the sales to Russia. So that's what is going on here with all these geopolitical tensions. They are really coming down with their estimates slightly, and also China lockdown, as many of you know. Situation can improve from here, but they want to give a little bit softer guidance. It's better to be safe than sorry. They want to give a little bit softer guidance and then beat it as we go forward. So with that, in conclusion, NVIDIA is a market leader and they're out innovating. They are really doing well when it comes to artificial intelligence and gaming and data center. Stock is oversold. I would take advantage and buy the stock moderately. Can stock come down by a couple of dollars? It can, but at these levels, it's a compelling value. I would be accumulating it myself. It's a great buy here. So with that, thank you very much. Happy investing and trading. Please subscribe.